morning everyone. Just a very quick video here on some of the things we've been talking about over on Twitter the last while around how the E-Mini S&P 500 is currently trading. I mentioned that over the last week or so we'd spent some time in a period of balance, and what the last couple of days trade have actually meant and what we can actually carry forward as MGI or market generated information. So what we have on the screen here in front of us is this is a weekly profile view of the E-Mini S&P. So I'm looking at the September contract, and each of these profile boxes represents a week's worth of trade. So all we've done here in Sierra chart is just blended all of the 5 days together, and it's delivering us these types of shapes. So this over here is the current week that we're on right now. Which is the week commencing the 13th. And the week previous was this one over here, which is going to be the core reference points we're working off over the next day or two in terms of trade. So let me just erase those, just so we can see what we're looking at. So where I'm predominantly interested in at the moment is this particular profile here, which is last week. And why I'm really interested in it is because of this particular week in here, which was the second week in June, and this week in here, which was the sort of tail end of May, beginning of June. And there are two pretty significant gaps in each profile. So there's a gap here and then a gap in here, and what gaps typically mean is that there's a bit of a vacuum or that there's been zero price action traded between these levels. And market profile theory teaches us that at some point the market's going to want to come back and revisit these levels. And what's really important is when we maybe draw some lines in here. Let's stick one here as the very top of the gap, and we'll stick another one down here as the very bottom of the gap. These levels are significant because this is where we can expect a huge amount of the trade to take place in the future. We can only expect that. We don't know if it's going to happen, but we can expect that if we come back into between these two zones, we're going to probably spend some time here. And that's exactly what happened last week. So we had, anytime we got up and over above this sort of level, now I've sort of eyeballed the numbers here, but the level is 31.77 as the level that the market really respected last week. And then down below here is 31.05, that what we would say is a support for the previous week. So this is a 5-day period of balance. Now, so if we jump across into our candlestick chart, we can actually see this a little bit better. So what we're working with over here is pretty much these 5 candles here, and we would consider that a period of balance. And when we talk about a period of balance, this is where the buyers and sellers are in agreement that there is value to be found at the higher end and at the lower end. So when the prices get too low, buyers step in and drive it back up. When prices get too high, people are willing to sell and drive it back down towards a medium. And that delivers this type of a shape that we see over here. And that's really significant, because any time where we spend a significant period of time bouncing between two levels. Now, last week was a really nice week to trade in that you could have some confidence about buying down here. You could have a relatively tight stop and know that you're at least going to get it up to at least up to the 31.45, 31.47 type level as a high probability trade, and that's basically the median between these two levels that I've marked out. So again, if we'd gone too high, we could have gotten short up here and played for a reversal play down to the median. That's pretty much how the week played out. But anytime we spend some time going from a high to a low and we're just bouncing back and forth, there's the expectation that when the market breaks above or breaks below, it's going to do a couple of things that we know for sure. So Peter Reznicek in shadowtrader.net, he talked about this in his weekly video this week, in that we can either do one of two things on the upside, and that's we either break above and go higher or break above and fail. The same can be said for the lower level, that we can either break lower and go, or we can break lower and then fail and go back in here. And when each of these scenarios plays out, we can have a high expectation that we can revisit the other side of this particular balance area. So in this case, if we break higher and we fail up here, which is something that did happen last week, then we can have a high expectation that we can go back toward at least towards the median, but also we can revisit the lows. So over the course of this week, this is kind of how this is played out. This is the 12th in here, Sunday the 12th, leading into the 13th, which is Monday. So we opened up here, so we gapped up on Monday, and let's break these out into their own columns. So we gapped up into the 3200s. This is on the back of closing very, very high on Friday night. We, in the end period, have pretty much closed on the highs, and that was the weekly high. And then that usually signifies that there's potentially unfinished business in here. So it was only natural that we got a gap up on Monday morning. We traded higher, and what's really interesting is we didn't go higher than the previous high. We got rejection in here, sellers stepped in, and the whole remainder of the day we sold off hard into the close. Only in end period during settlement did we sort of correct somewhat and close significantly above this 31.47 to 31.45 zone. That is significant, and that is again MGI that we can carry forward. Then we look into Tuesday, and Tuesday was a really interesting day, which was yesterday. And coming in, I genuinely felt that we were going to really test the lows. I thought there was a high probability that we were going to initially trade higher and then sell off. That's pretty much what I was saying on Twitter, and that's kind of what happened. We opened down here, we traded up to the 31.52 level, and we then sold off hard, and we tested some of these lows here. Now, we had anticipated that the lower end of this zone was the 31.05 that we'd expected to see from last week. We didn't get there. And again, this is something that Peter Reznicek talks about, and he calls it when what should happens doesn't. And in this case, we should have seen a test down here at the 31.05. Personally, I thought it could have gone lower into this particular range down here, sub 3100. But we had buyers really step in here, and trade got pretty wild, and there were some pretty serious moves. But you can see that in C, D, E, F, G periods, we've really come above this 31.47 line in the sand, which was the sort of midpoint from last week, and we were staying above that, and that is when I really started to think that we could maybe finish green here. The selling could be done. We have failed at the lows, and when we fail at the lows, there's a high probability that we're going to go back and test the highs. And that's exactly what happened yesterday. During end period and end period, we really rallied up higher. Now, what is significant again is that we look at the single prints from Monday, and the single prints from Monday are in L period here, and they go down to N period here. Then we also have further single prints here, all the way down to here. So we have from 31.69 down to 31.51, and single prints represent emotion in the market. It's generally just people panicking and getting out as quickly as they can, and it doesn't really represent two-sided trade. So again, Market Profile teaches us that there's a high probability that we're going to come back to these zones and potentially retest them. So that was another clue that I had coming into yesterday, that this zone here and this zone up here, the market's potentially going to want to go back and have a look at these. And when we failed at the lows down here at the, I think we printed a low of 31.19, we failed at the lows down here. We didn't get down to 31.05. That's an incredibly bullish statement from the market, in that there is no sellers willing to sell even at 31.1850. Not a single person was willing to sell there. So that immediately tells us that we're going to go back and retest the highs. And we spent a bit of time during D, E, F, G, H periods filling out this zone here, which was the single prints. Let me just mark those off here. That's these in here. And that's where we spent a good chunk of our time yesterday. Then again in here, we have the single prints from Monday. That's where we spent another chunk of time yesterday, exploring into these single prints. Now in J period, I think we came up and we did a sort of a price exploration, and we didn't really get too much further. Then again in K period and L period, and each time we were kind of within a tick of getting to the high, but we didn't get there. That is again significant that I would carry forward into today's trade, which is Wednesday. So when I collapse that down, what I'm interested in today, I'm just going to remove these drawings. What I am now interested in today is this period of this set of single prints in here. I'm interested there, and I'm also probably interested up here as well. And these are the areas that I'm going to be trying to play for today. I generally treat N period like it's settlement, so I would generally treat this full N period as a single print or as a price probe or as a price exploration. I expect the market to come back and potentially revisit these levels today. Going again into our overnight session, or so our Globex session, we are 100% net long. So we have gapped up on the futures open, and this is on potential hopes of a coronavirus vaccine. We've gapped up and we've been pretty orderly. We've traded up here into sort of a 32.14 level. Just mark that out, up to the sort of 32.14 level, and come down here just sub the 3200, and now we are back up at the 32.18 level. So we need to think about our inventory play here. So there will be some parties in the market who will have taken in some inventory down here at the sort of 31.84, this kind of last half hour of trade. They've taken in some inventory, and whether they are buyers or sellers, we don't know yet. But there is an I would have an expectation that today we would see, depending on where we open up here, if we open in this sort of zone here, that would represent a pretty significant gap, and we would look for some sort of a gap close, and that would be maybe some wholesale getting short off the open with a view to taking it down here and taking profit based on maybe some of the inventory that they took in overnight. If you want to know a little bit more about inventory, we cover that off in all of our course material on Market Profile, and it gives a really significant insight into the mechanics of what's going on in the background when you trade the E-Mini S&P Futures. So I hope that gives a good explanation of where we are. Just to recap, we have on the weekly, we have had this period of balance, we've broke higher, we have failed higher, we've come back, we've tested the lows, we haven't even got to the lows of the previous week, which was really significant. So that is a failure at the lows. Now market profile theory teaches us that there's a high expectation that we will now go back and retest some of these highs up here. And some of these highs that are significant are around the 32.35 level, and then again up into the 32.61, and then we have that enormous gap up here corresponding to sort of mid-February, and that's 33.22. That's unlikely to happen today, but these are the sort of lines in the sand that we will be looking out for. We'd be looking for a break higher above this particular week in here, which is the beginning of June. Breaking above 32.33 and holding above that would be bullish for attempting to close the gap. Hope that all makes sense. By all means, drop us a comment in the comment section down below or get into the DMs on Twitter. Thanks again. Hope you enjoyed.